So good morning, good afternoon, good evening, wherever you're watching this webinar. You are welcome to the Periodic Cycle Capital Limited webinar. And our topic for today is the Gen Z approach to investing, pivoting from instant gratification to micro investing. My name is Damilola Bangboshi, and I'll be your moderator for this event. We have a group on a couple of amazing panelists that will be doing justice to the question today. And in no particular order, we have Adesha Bilola, we have Emmanuel Akinyemi, we have Oladele Robert, and last but not the least, we have Adetilewa Gbadebo. So now let's get to it. These days, we see a couple of, at least most of Gen Zs these days, within 2 minutes, 3 minutes, within a period of time, they learn about yields, compound yield, mutual funds, a lot of investment opportunities, either through the tap of their phone or whether they are just even commuting to work or through any other means across the social media. And you find out that these days they actually have more and adequate or even more than enough financial knowledge about investments than other clients, or can we say our parents, when they were at a similar age. But however, there's this kind of a disconnect whereby we see that this sound or adequate financial knowledge is not really impacting in terms of investment and investing that Gen Zs do. So is there a disconnect, or is there something that we are missing, so to speak? So that's why we have this bunch of amazing panelists that I actually introduced earlier, who are actually within the age range, and they actually have commensurate experience in investing and research. So without further ado, get to it. However, this is supposed that this is not your conventional webinar. We appreciate your questions, and I'm sure that our amazing panelists will do justice to that. So I'll be starting with you, Adesha Bilola. Most Gen Zs have often been accused of choosing lifestyle over legacy. Is it a real problem about spending habits, or have traditional investment institutions, have they failed to make investing attractive or available or accessible enough to our Gen Z generation? What is your take on this?
So, if I got you clearly, you are saying that there is a problem, and do Gen Zs have a spending habit, or traditional finance institutions have they failed to make investing attractive? Okay, I would say both parties have a role to play, and I'm going to start with the traditional investment institutions. The traditional investment institutions for years, they've presented investing like something that was reserved for older and wealthier generations or individuals, and it was hard for an average person, or let me say a Gen Z, to just say, oh, I want to start investing. The investment language was hard, minimum requirements were high, and financial literacy was limited. And when I say limited, it is very, very limited. Take it down to our educational system. In schools, we are fed financial theories. There's no proper way to know, okay, this is real life money making strategies. This is how to assess or mitigate risk. This is how to build wealth. So none of these things are being taught. So for a young person that's been fed financial theory, we want them to just come and make sophisticated financial decisions. So all these from the traditional investment institutions, and it makes it hard for a young person to find a pathway into investing. On the other hand, we also have the Gen Zs who have a lot of access to information, opportunities, and tools. But it is important to note that even though we have those access, we consume a lot, and it is hard to distinguish which one is genuine and which one is noise. We live in a society that promotes consumption, not investments. And even I, as a Gen Z, when I go to social media, all I see is lifestyle being sponsored, gadgets, tools being flaunted. Even I want to flaunt. I don't want to wear this wig tomorrow. I want to wear maybe like a 28 inches Bond Street. I want to be hot. Like, I want you to feel the fire everywhere that, oh no, this person is there. So when I'm having this consumption mindset, it is hard for me to prioritize investments or investing. And this is the problem from the Gen Z's part. So for the Gen Z's, we have to look beyond instant gratification. So it's not like we want to promote lifestyle over legacy, but that is just the current reality of things. We have to overlook instant gratification and focus more on investing. Thank you.
Thank you for that brilliant take, Adeshaya. As you said, the issue is not instant gratification, but we should look beyond it towards quality and instant investing. So I'll be coming to you now, Emmanuel Akiyemi. Most of Gen Zs, they say, oh, I'll start investing when I earn more. And from your experience, is low income the real barrier to investing, or is it just a mindset issue? What is your take on this?
So, yeah, of course, low income can certainly be a barrier to investing because you can't expect someone that is having a low income of, let's say, like 100K or 50 to come and start investing in any of those volatile investments. So, of course, it could be a barrier. So, it's not going to be fair for us to say, no, low income is not a barrier. No, it is a barrier because I can imagine maybe when I was in school, someone is selling me an investment. I probably not even take you serious. I might listen to you, but I might not even take you serious. Like, how much is my allowance that you want to come and be investing in this thing? I beg, just allow me. So yeah, low income could be a barrier. However, it's important for the Gen Z, and I think most of the Gen Zs now we have seen that okay, investment is all about the mind. It's more about the mindset, right? You are supposed to build this mindset of investing even though you are earning, you have a low income, right? There are no entry investment requirements that you can go into, like the money market fund, right? You can do that. Even in investment banking, you have an investment instrument that you can also invest in, right? So yeah, it's all about building this mindset of investing, not basically how much you are investing, right? Because if you take, for instance, someone at the age of 22 years now is investing moderately over a long time, with time, that person is going to build interest with the power of compounding. That means as time goes on and plus his capital is going to be compounding now. Compare that to someone that started investing probably a large amount at the age of 35 years, right? You might want, if you want to weigh both of them, the person at 22 years will have gained experience, number one, and number two, will have also gained more interest compared to the person at 25. That person at 25 now is just new to the market and it's going to start to make a lot of mistakes and all of those things. So, yeah, investment is all about building the mindset and not even your income at all. Yeah, that's my take on that.
Thank you for that wonderful insight, Emmanuel. As you've heard from Emmanuel, building an investment mindset remains key to building compound generational wealth. Thank you so much for that. So I'm coming to you now, Oladele Lovett. Research, it's shown that really, and I actually agree with that research that Gen Zs are actually one of the most financially aware generations that we have because of the kind of information and the access to that information they have at their disposal. Yet, many of Gen Zs, many of us per se, really still struggle with wealth accumulation. Is it that the knowledge is not translating or impacting into action? What do you think is the disconnect here?
Oh yes, I agree with you, Dami. I would agree that we are the most financially aware generation. But let's just look at it. What's the meaning of financially aware? So for me, I will say that financially aware is having a good understanding of how money works, right? And how financial decisions affect your future, your present and your future well-being. So I'll say that we Gen Zs, we have all the tools available to invest. Are we talking about our phones? Are we talking about our laptops? Are we talking about social media, all the podcasts, all the WhatsApp statuses, or just name it? We have all that. We see all what others are doing. We see all what other investors are doing. But the having the being financially aware is not enough. We Gen Zs, why this awareness is not translating into financial wealth is that we live above our means. We Gen Zs, we just want to overdo. We just want to do what others are doing. Oh, my friend got this, I need to get this also. Oh, now they said iPhone 18 is out. Oh my God, I'm going to be the first person to buy it. Oh, my friend has a car. I also want to get my own car. Oh, see Shayo's air. Shayo's air is expensive. I mean, I'm just making attachments. I'm fine now. We are earning the same amount. So why can't I get it also? So we just put unnecessary pressure on ourselves because we see others doing it. Also, I feel that I also fear of starting is also one of the reasons why we struggle with wealth accumulation. We've heard of so many things. This investment scheme that happened last year, we all know about it. So we know that we really do not know which is right. We've heard of so many things. We've heard of, oh, invest in mutual funds, invest in bonds, invest in commercial papers. Oh, you need to buy a plot of land. Land appreciates. So there's just so many information, just so many ideas coming in, and we really do not even know which one to invest in. So I'll say that fear of starting is also part of it. And then lastly, I'll say high cost of living. Things are very expensive now. The amount we are using to get things now is a lot. We are going through a lot. We are seeing a lot. So we are just trying to be able to invest the little we have. And then for others who cannot invest also, I feel like this is one of the reasons why we cannot invest. And also, we are exposed to so many information, like I said earlier, on social media, podcasts, YouTube channels, newsletters, investment apps. There's just a lot going on everywhere, and we are really finding it hard to know which one exactly to invest in. So I would say that these are the reasons why we struggle with wealth accumulation. And then lastly, from also that knowledge is not enough, right? Consistent action is the real deal. Thank you, Dami.
Thank you for that final take. As you heard from her, knowledge is not enough. Consistent action remains the key deal. So, you mentioned something like that about instant gratification and the like. So, and I want to now take this question to you, Tilewa. We see older generation that they actually believe in delayed gratification, right? And we Gen Zs, we live in a world built on instant gratification. So, would you now agree, or would you say that instant gratification is becoming obsolete, or does it still remains the ultimate building principle? What do you think?
Yeah, in my opinion, I feel delayed gratification is not dead. It just needs a fresh new perspective. Because for a generation that grew up watching our parents save in savings accounts, falling for inflation or subsidy or one policy to erode their purchasing power, I think this capitalism is justified because we know the value. We know if our money is not working for us, it's just the value is going to waste. So the perspective should change from save now and hope the future gets better. It should be save now and make your money work for you, because every hour or every naira you invest saves you a labor, an hour of labor. So you can always be a big boy and a big girl and still invest. There's no one or two ways about it. So in my opinion, I feel the option is not dead. You just have to build investing habits and let compounding do its thing. Thank you.
Thank you. I like the word save now and let your money work for you. As we heard from Tilewa, delayed gratification is not there, it just needs a little tweaking. So I'll come back to you now. I think we've gone the whole world. I'll come back to you now, Adeshayo. Just picture this. If a 23-year-old should earn like 250K monthly today, would you advise them to actually prioritize investing? Or would you say they should go and build a business? Or would you actually advise them to acquire more skills? And if you are choosing any of the three, why would you be giving them that advice?
Okay. I won't be choosing any of the three. Rather, I'll be ranking it in my own way. So, on my priority folder, I would have the first thing a 23-year-old who earns to 50,000 should prioritize is acquiring valuable skills. The second thing is invest. The third one is build a business. And the reason for this is that, say a 23-year-old is into 50,000, let's say, okay, this person is just a salary earner like you and I, and we know for this to 50,000, you have to meet basic expenses now. We have shelter, clothing, we have to meet all these. Then it doesn't end at that too. We also have black tax. If you're not giving it to maybe your distance cousin, your relatives, you're giving it to these egmons on the street. And these days, they don't even take the format that, oh, I don't have cash. Immediately you tell them that, they tell you transfer, I have bank accounts, So once you take out all these expenses, what is left? You rationally think, what is left? What is left is little. But inside that little, it is still very, very important we acquire valuable skills, because that is the only way you can increase earning power. When you acquire skills that are relevant and in demand, that is pertaining to whatever it is you are doing, it would help you, because that's the only thing that has a long-term impact, like career-wise, like growth-wise. It has a long-term impact, because increasing earning power would not, or getting valuable skills, it would help you build better career opportunities. It would help you during resilience. Let's say things go south now, at least you have your skills to fall back on. So it really cannot be overemphasized that yes, you need to get valuable skills. Then after that, you can go into investing. No matter how little it's left, even if it's the urgent 2K that is left, it is important that we invest this, because you see, not investing is more behavioral than technological, because there's really no excuse. You can't come and say, oh, barriers are too high, this or that. With our AMMF now, you can invest with 10,000 naira. You can start with 10,000 naira, and there's no you can add anything. So even if it's 2K, you get what I'm saying? So you can develop that mindset and say, okay, let me start with 10,000 naira. So even if it is little, you need to fall back on investing after you've developed valuable skills. Then after that, you cannot think of owning a business, because to be very honest, running a business requires a lot. You need to learn a lot of skills, leadership skills, management skills. And when I'm talking about business here, I'm talking about proper business. I'm not talking about just setting up maybe a WhatsApp store and saying I see you. A proper business requires a lot of skills. So after you've gotten your skills, you can invest, then grow consistently, and over the years, you translate all those into running a successful business.
Thank you so much for that. So you heard from Adeshayo, start gradually, build a skill, invest, then build a business. And as I said earlier, so we have for us at Echo Capital, we have a free of funds and investment options that can actually be suitable to your investment objectives. And also, please keep your questions coming, and I'm sure I can actually assure you that our panelists will do justice to them. Now, let me come to you, Emmanuel. What is the biggest difference between wealthy individuals, how they think about money, and then how an average young person like you and I think about money? What's the difference, or is there no difference?
Yes, so that means yes, of course, there's a difference, but I'm not wealthy yet. Also, I would believe that the way wealthy individuals see money is when individuals have cracked this code of trying to create value in exchange of money, right? So, in one way or the other, if you look at every wealthy individual that they are usually selling something of value, either by goods or services, something that people want, right? So they've been able to crack that idea of saying, okay, yes, let me exchange value for funds. So when they do that, of course, they will have enough of cash at their disposal. And by so doing, instead of them working for money, their money is just already working for them, right? So that's what I would say wealthy individuals have done to keep themselves different. So as an average young person like you and I, right? Now when we get our paycheck, the first thing is for us to probably have our daily expenses that we need to set to. We have younger siblings that will tax us, like Shayot have said, right? So one way or the other, money is going to leave your pocket. And if you are not conscious of that, you end up spending that paycheck finish. So it's very important for we the Gen Z. And I think we have seen most of us online now on TikTok now. We are doing content creation, just trying to draw audience to our page one way or the other. So these are the things that you set you like make you more valuable. So when you are able to create this value to people will buy into. If it's a business like that, Shaya have said, that it's not easy to run the business, right? So if you're able to successfully do that and you're now making your money to work for you, I mean, you're already on your way to success. So yeah, that I think is the main point of difference between how wealthy individual thinks about money and a young person. Thank you.
Thank you. Thank you so much for that wonderful insight. So I agree with you that bring something of value and actually creates the funds to actually enable you to build generational wealth. Love it. Let me come to you. Looking at emerging trends that Gen Zs are paying attention to, particularly emerging investment trends, what are these emerging trends that you think that we Gen Zs are paying attention to that perhaps traditional investors or may not be paying attention to, or maybe they perhaps underestimating,
Okay. I'll start with products. There are so many investment products out there now that the Gen Zs are paying attention to that the traditional investors did not even think of, or it was not available then. And I'll say that even for the Gen Zs now, there are so many products that we are all going into, and then we come back with in premium tiers because we do not really get the idea and we just want to jump into it because other people are doing it and because they are making money from it. We're not even sure if they are making losses, but because they come online to say, oh, I'm into this and I'm making money from it, why don't you try it? And then we also just go to download the apps and so the second one is sources. We get, yeah, like I said earlier, we get our sources from everywhere online. Even for us here at ICO Capital, we have our sites where you can download our researches from and you get ideas from it. You get daily research, monthly, weekly. And once you download it, you know, okay, what happened in the market? Okay, how is the market trading today? Or what happened? What caused? What's the sentiment behind it? You know, all that, and even our outlook. So I would say that for the Gen Zs, we have so many sources where we can get our ideas from, and which can also help us in investments. And then for the third one, which is the last, I'll talk about Gen Z starts early. You know, the traditional investors are sleeping on the early access. But you know, the Gen Zs, we are here for it. We are not here to play. We just want to be there, you know, we want to be the talk of the town. So I would say that we start early, you know, even for some of the gens, for some of us, the Gen Zs, our parents start early for us, as early as 3 years. They already have an investment account for you where all the money you get from all the aunties and uncles, you know, they keep it for you there so that once you grow older, you'll be able to have access to your money. So I'll say that all these are the emerging investment trends that Gen Zs are into and the traditional investors are sleeping on.
Thank you so much. Love it. And thank you, as you heard, filter what you hear. And for us as ICO Capital, as Love it has actually shared, we deliver periodic updates on investment that can actually suit your appetite and your objectives towards investing. So I'll be coming to you now, Adetilewa. So if Gen Z, if we now prioritize experience over asset accumulation, what long-term economic consequence do you think we imagine in this case? Do you think we imagine this place?
Okay, Dami, thank you for the. So I believe Gen Z has changed how we see wealth because the previous generation, the signs of success was probably owning a house, owning a car, owning a few houses or a house. But in this generation now, the younger generation values experiences, exposure, uh, freedom. So now that, sorry about that, and these experiences build confidence over time and even opportunities also. So now, when the economic challenges comes in, is when you focus on consumption over accumulation. For example, let's say for the Gen Zs, for example, let's say we grow up now, like when our 40s, and we focused more on consumption and catching cruise or getting the exposures without getting a house or without investing in equities or anything. At that point, at that age, you will probably have a family. You probably have a family already, and obviously the family won't be doing well because it will be hand to mouth. As the salary will be consumed monthly, and there won't be any avenue to save or even invest for a child that comes up eventually. So, but the good news is that for the Gen Zs, there are better options. There are more micro investing platforms now, and there are more avenues where you can branch out and invest as long as it fits your financial plan. Thank you.
Thank you. Thank you. Thank you. Thank you, Adetilewa. Thank you. So I'm coming now to you, Shayo. These days on social media, we see a lot of trends, about people displaying wealth. Is it Snap? Is it TikTok? Is it IG? Is it Facebook? Name it. We see people actually, displaying wealth daily on social media. So how can we, how can we really differentiate between genuine wealth creation and the illusion of wealth?
To be very honest, that question, it's hard to answer. I'll say it's very tricky because how do we expect to differentiate between genuine wealth creation and the illusion of wealth on social media? Social media would always present everything like real sources. So we don't know what is going on beyond the surface. So when we come on social media, we see everybody lavishing around, lifestyle everywhere, and we don't even know which is true. We don't know which is false. It is very important to know that wealth are gotten from different sources. Some people inherited wealth. We have the Nepo babies, like we all refer to them. So, some people built it through consistency and innovation and maybe even hard work. Some people built it over years, and some people got it through illegal means. But you are not going to know. A lot of things are happening, and one way or the other, this money are being integrated to the society, and there's no way you can know. So the best thing is we should do our own research. We should understand wealth and how it is sustained, and we should note that, yes, this is how to get proper wealth. Again, if you do your research, it is actually, to an extent, you might know which is genuine and which is the illusion of wealth. Online, there's borrowed appearances, sponsored attentions. You might just be feeling like, oh, I might not be able to tell. But real and genuine wealth, productive assets, consistency is being put into it, hard work is being put into it. It's not just something that overnight you are just coming to showcase. And again, it is even, I think it's important I had that most of these like wealthy people, they are not even online. Like they are not really, really online. So to differentiate is very, very hard. You just have to do your own research and know, yes, this is the practical and right way to get wealth. This is the practical and right way to sustain it. But knowing that, oh, this person got this money through illegal means, it is hard because everybody, they're packaging on social media. You might never be able to tell. Just have your own peace of mind and do your own research. That's my take on that.
Thank you, thank you so much, Adeshayo. So as you heard from Adeshayo, do your proper research, understand wealth and how to sustain it. Thank you so much. So for our people viewing us, watching this webinar from wherever you are, please keep dropping your questions, and our panelists will do justice to them shortly. Now, coming to you, Emmanuel Akinyemi, it's an open secret that AI, automation, technology, they keep reshaping jobs these days, right? And they are actually, if I can say, they are come to stay. So how do you think Gen Z should actually rethink investing over the next decade in view of this?
Okay, yes. So of course, AI is not only shaping jobs, so it's also it's also giving away, it's also changing how wealth is being created, right? So these days now you have AI at your disposal, although it's nothing you have to pay for. But however, you have AI at your disposal, you can use it to create content, you can use it to make your work faster. Yes, so with the Gen Z, and you look at now the oldest Gen Z is 29 years old. So whether we would like it or not, we're going to get old at some point. So yeah, we have to position ourselves strategically so that we can, when we are older and we start having kids, right, they can refer to our kids as Nepo babies, not Lapo babies. So yeah, so what we can do in that aspect is to look at sectors that that you think that will do well in the next decade or two, right? So we can probably position ourselves in those kind of sectors, and also it does not mean that when the world start picking up in technology, you know that we in Nigeria we are even far behind technology. So we as Gen Z, we have to be on our toes at all times, right? We have to be moving with the trend. And I know that we are very, very good at that. However, when we get older, we tend to want to drop off a little. But as long as you keep yourself in check all time, when there's a new development, you are on it, you are not slacking. I mean, you are on point all the time. When there's a new, maybe AI or technology that is want to know about it. By so doing, you are keeping yourself in check and you will not lose touch on the long run. So we should look at the sectors. There are different sectors that we can see now that are picking up in the industry. So we can want to invest in those kind of sectors. So when they start to pick up, we will not be left behind. Right. So yeah, because whether we like it or not, another generation is coming at our back and we will not always be in vogue forever. So that would be my take on that. So we need to position ourselves strategically to meet up with this. Thank you.
Thank you so much. So you've heard it from Emmanuel. Don't slack, don't sleep on it. So I'll be coming to you now, Lobet. As a researcher, looking at economic realities, inflation, income growth, do you think Gen Zs actually face a tougher world-building environment than previous generations? And why do you think that's the
Like,
case?
yes, so we are facing a lot. There's really a lot going on right now. Like the pressure is just getting worse day by day, day by day. We're just managing. As you can see us, we are managing. We're just trying to be there. So I'll say that the cost of living, we all know that things are getting more expensive. Like I said earlier, you're trying to just rent an apartment, and you know how much it is right there. You know, if you want to get just a room, you know how much it's going to cost. You just want to buy food, you want to have food on your table, you know how much it costs. You just want to go to work, you know how much transportation is now. So also cost of living is really taking a toll on us. And also also educational costs. For the traditional investors, we know how much it costs them to it costs them to gain knowledge, and we know how much we are paying for now. We know how much it costs us now. So that also is one of the reasons why it's very, very tough for us to build wealth. Also, peer pressure. Follow. What my friend is doing, I must do it. Peer pressure is we just want to be there. I'll keep on hammering on peer pressure. I don't know who is setting the standard for us, so but you see anything we just see online, we see our mates or people that are not even up to us. We see them doing some things and we are like, oh no, for this person to be able to do it, I should be able to do it also. And I think where the problem started from is when we started saying God when. And this God when alone is just you putting, just stroking yourself. So also that this are the reasons, and then also societal expectations, what people are expecting from you, your parents, your siblings, people around, your church members, just name it, even your colleagues. Yeah, they're just expecting a lot from you. I need to, you're indulging them. You're letting what they are saying affect you. So once it starts affecting you, you just want to be able to meet up to their expectations. And with this, you will not even be able to just save a little. Just 10,000 naira, just 50,000 naira, just 20,000 naira. It's not a lot. Even just 2,000 naira, you can save with just that. So I'll say that it should not be a lot for us to save if we do not pressure ourselves. And then the good part is even without things are very, very tough nowadays. I'll say that building super early is going to make things very easy for us, building even from when you start knowing what investment is. And we have our phones, we have our laptops, we have places where we can get information from. So all this it has really made things very easy for us. So also that no matter how expensive things have gotten, we should be able to train ourselves, we should be able to discipline ourselves to be able to invest. So also that the game is harder, but with the right products, we are better equipped.
Thank you so much. Thank you so much for that final say. The game is either with the right product or to review. Speaking of products, also please note that we have a slew of investment products that manage your investment appetite. We have our AMF, we have our ABF, and you can get more information on our website. Thank you so much for that. So let me come to you, Adetilewa. It's always said that successful investing is actually a function of financial knowledge, but these days now we're now seeing a fight between financial knowledge and emotional discipline. So in your view, how much of successful investing is actually about financial knowledge versus financial discipline?
Oh, thank you for me. So for me, I think it's emotional discipline because the information is out there nowadays. You can easily learn financial literacy from anyone, from any social media platform, depending on who you are following. So most investors don't underperform because they lack financial knowledge. They overperform. I mean, they underperform because they get scared. Probably during the market downturn, they get scared and they sell, or just because they react emotionally. So, but emotional discipline keeps you steady as long as that's the plan. Like for example, now you're not meant to be investing if you don't have any financial plan. You're not meant to be investing if you don't have any financial plan or objective you're trying to get at the end of your investment. So if the downturn or if any investment you are currently on still jives with your plans, I don't think you should let them your friend comes to me and says, oh, this stock is dropping. And you're like, I just bought this stock last week. Let me go and quickly sell it, this, that. Those are not going to help you get better or perform better at investing. So let's take it like this. Knowledge is the map, while emotional discipline is the drive to stick to the plan. Even if that new iPhone comes out, or even if that week that you're behind gets a discount or goes on sale. So that's it for me. Emotional discipline takes the winner. Thank you, Dan.
Thank you. Thank you. As you've heard from Adetilewa, knowledge remains the map while emotional discipline takes you there. Thank you so much. So, Shayo, there's this thing about micro investing, they always promote it as a future. But can investing a small amount, the urgent 2K, the 1.5, can it really truly create life-changing wealth? Or does it simply make people actually feel financially responsible without actually producing any meaningful outcome? What's your take on this?
I'm not going to say micro investing makes people feel financially responsible without producing meaningful outcome. And the reason for that is that, it is not about investing little amounts. Micro investing can work, but under certain situations. So imagine I invest into 2,000 naira, and that is what I can afford right now. I'm investing 2,000 naira. Then, if you can remember, I said earlier that the first thing and the best thing you can do for yourself is to increase earning power. Over time, my earning power increased, and I increased my investments from that to 2,000 naira to maybe 13,000 naira now. So it is not just about investing to 2,000 naira. The problem would come when people expect the small amount that was invested. They want it to compensate for maybe inflation and all the rest. But if you're investing small amounts and you are increasing it can create a life-changing wealth. So the problem is I want to invest 2,000 naira maybe monthly, and I want to still make this money take me to Santorini. I want to sponsor my children out of this money. I want to do family. So it cannot work that way. But the formula is not small wealth into small investments is cost to wealth. The formula is small investments plus time plus consistency plus increasing earning power. It can give you wealth. But when you are falling back on that small money, it would not work that way. It's not like it will not work at all, but it cannot give you the transformational wealth you and I are looking towards. So the best thing is increase your earning power, invest consistently, give it time. So that's just the formula for me.
Thank you so much. So we can always take this formula. Wealth is equals to small investment, time, consistency, and improved earning power. Thank you for that formula, Adeshayo. So I'm coming to you now, Emmanuel. What is that uncomfortable financial truth that every young professional needs to hear, but they really want to hear it?
Yes, so damn me, you're putting me on the spotlight. Anyways, one one uncomfortable financial truth I would say would be that we believe that when I start earning more, that's when maybe I'll get more wealthy, I'll get wealthy, right? But in my own opinion, I don't think that's the case because when you start earning more, right, you are going to even have more financial commitments, more financial obligations. That's when your folks will be expecting so much from you. Oh, come and do this, come and do that. I mean, it's good to do all those things, right? But that's what comes with anymore. So if you believe that, oh, let me wait now when I start earning in billions or whatever, I'm start investing. I'm sorry, you are not on the right path. So I'll say that if you are able to, with your small, I understand that now the economy is not even smiling with anybody, but that's where you even have to even grow your network. You have to have friends with you that can pull money together and you guys can come together to do something good. You do not necessarily have to do it alone, right? You have friends, you have build your network. Let your network have the same mindset as you have, right? So when you do this, you'll be surprised what you guys can do as a number. So I would say your you waiting for you to earn more is not a criteria or not a guarantee that you be wealthy. There are a lot of people that earn more, that are earning high, but they are not really wealthy. What happens to you when you lose that source of income? I mean, if you are earning millions and you are renting an apartment in millions, within and unfortunately you lose that job within a year or two, you are going to be struggling. You are going to be looking for money to fund your daily expenses. So I would say that we like to say that yes, when I earn more, well, no, it's not always the case. When you earn more, that is even when you don't have to even like bring yourself down to the rest. That's okay. This extra income, whatever is not useful to me, at least let me put it into use and make more money for myself. Start something, create the value. You don't do a business, just do something that brings in more income for you. And yeah, that would be my take on that. Thank you.
Thank you, Emmanuel, for actually clarifying that image of when I am more, when I am more, I'll start investing. And thank you, as you said, early investment remains key. Thank you to our people. Please, we are seeing your questions. Keep them coming, and I assure you, our panelists will do justice to them shortly. So I'm coming to you now, Lovett. As a researcher, what does data tell you about the big?
So please, can you take that again? I did not
Oh,
get that.
sorry. Okay, props. Yeah, so I said these days now, what does data tell you, about the biggest mistakes that first-time investors make within the first 3 years of their investment or investing rather?
Okay. I don't know if I'm supposed to mention peer pressure again because I think I've overused the word. But okay, let me say following trends. Gen Z's, we are just all about trends, what is happening right now, like as they ought, what is going on right now. That is what I want to do. So, and I'll say again that not much making enough research. We just want people to tell us what to do. Okay, invest in AMMF. Okay, invest in ABF. We do not know, okay, why should I do this? Why should I do that? If I invest in this, what is the yield like? What am I going to gain from it? Is it going to serve me for a very long time? We're not making enough research. We're not even getting our information from the right places. We have sites like for us at Echo Capital, we have our sites where you can just log in to get your research. We have practitioners that you can call, you can speak with, and they're going to lead you right. They are going to tell you, okay, they're going to speak with you one-on-one. Our customers, we treat our clients with full respect. We attend to them like we just make you feel like a king. So just come to us. We are going to like put you right. Let's talk. one-on-one. Okay, what do you want to do? How do you want to do it? We're going to give you the best decision. And also, I would say that we Gen Zs, we want short term but high yields. We want something that will put our money into, but we are going to, okay, let's say, okay, I'm putting my 50,000 naira somewhere, and in 2 days, I'm going to make 150,000 naira from it. That is not even logical. Like, how would you want to put your money in something like that? And you will sleep peacefully and expect it to bring that much yield. So I think that is one of the mistakes first-time investors makes, and also lack of diversification. At ICO, we have our ABF, our balanced fund, where we deal with mutual funds, we deal with stocks, everything. We just bring everything together, commercial papers, everything is just coming into one for us to be able to serve you better. So instead of you just putting your eggs in one basket, why don't you just try to spread it around and see what it brings back for you? And also, for me, the emotional investing and panic selling, we all know what is happening in the equities market right now. You see that it's bearish. Some people would have stocks, like some of my friends, they have stocks, and when they see that, oh, the price is coming down, they just want to sell and make their money from it. They're not ready to take the risk. So I'll say that all these are mistakes first time investors make in the first 3 years of investing.
All right, thank you so much, Robert. Thank you for that elaborate discussion on that. And we also want to reiterate that you can actually reach out to us through any of our social media channels, and one of our people will actually get in touch with you. We have a flow of investment that are actually speaking to your investment appetite and your investment objectives. Thank you so much. Please keep your questions coming. As I shared earlier, our panelists will do justice to them. So I'm coming to you now, Adetilewa. What investments are currently spreading across, TikTok, Snap, IG, Facebook, and or financial investors that you want to advise young Nigerians should be cautious about?
Yes, Dami, thank you for that. The first one I would like to advise is that every odds investment online does not necessarily make it a good one or a legit one. For example, we all remember, like Robert already mentioned, the one that happened in Ibadan, that people started destroying properties and rioting because they could not get their returns and their principal. So for example, like when you see everybody making a decision to go into something and you want to follow suit, make sure you know what it is that you're going into, and make sure it matches your agenda or your investing objectives. Another misconception that people have again is that you need a large sum of money to invest, or at least to start investing. But the truth is that technology has made it very easy for every one of us to invest these days, because there are a lot of micro investing platforms that we can all use. So you can start with your daily 2K, the urgent 2K you're always billing your siblings for, and you can start with as little as 1,000 naira on some platforms. So another advice I'll give is that the most important thing we have as young individuals is time. And if you don't leverage on the time that we have, you will miss out on a lot of things. And one thing that I know for certain that you should not miss out on is compounding rewards consistency. So it's better for you to start early than start late. Thank you.
Thank you so much, Adetilewa. So as you heard from Adetilewa, time is money, leverage on it. I'll be coming back to you now, Adeshaya. I think we've gone through the whole round. Adeshaya, so as a Gen Z yourself, what financial bit amongst us really scares you as an investment professional?
Okay. As an investment professional, the financial habit that scares me is the normalization of performative wealth. And what do I mean by this? We Gen Zs, we feel pressured to look successful when we are not successful. The previous generation, They even, I would say they had it better than us. We faced a problem they don't face. Like the previous generation, all they do is, oh, they compare themselves to their neighbors. Mostly, they'll be like, I better pass my neighbor now. But you see, we Gen Zs, no, we compare ourselves to people we don't even know, people that don't even know that we exist. That's the people we use as comparison. So when we see them, we say, ha, look at this person. So the fear of always saying that, yes, so I want to be there, I want to belong, it would always come. Let me give you like a backstory that happened recently on social media. So there was this trend of maybe when it was like Valentine or maybe anniversary, people would come and get their loved ones maybe like a gift, expensive gifts. Then all of a sudden, when you just scroll on social media, your next post would be somebody walking into a decorated room and putting all this emotional music and crying. Until it got rampant and we all found out that, oh, these boxes are even empty boxes. They are nothing inside. So to what extent do we do all this? Because we just want to prove that, oh no, I'm there. I have it figured out. I have all these gifts to myself. So we normalize what is not even real. We want to make it look like, yes, we are successful when we are there. So the problem is not even I don't have money, is I want to get rich quickly. Again, we have this issue of expecting maybe somebody that is below age, expectation of speed. Maybe for a 25-year-old now, we expect the person to have it figured out already. We expect the person to have his own house, have his own car, which is not supposed to be so. So all these actions leads us into unnecessary problem, because you end up taking your future income, you spend it now because you have to borrow, because you just want to prioritize appearance. You prioritize appearance over ownership of productive assets. You just want people to see that you are there. Meanwhile, your bank account is even screaming. You are looking for who to borrow you money. All these habits will just endanger us. And when I see these habits coming to life and I see people actually engaging in it, it scares me. It scares me for this generation. I'm like, is this really what we want to do? So that's one habit that really scares me, to be honest.
Thank you so much for that brilliant advice. You heard from Adeshayo, be wary of performative wealth. Thank you for your questions. Keep them coming, and we'll do justice to them shortly. Emmanuel, let's just quickly take this. If you had to eliminate one financial habit from Gen Z culture today, what will it be, and why do you think that culture should needs to go? I can see you laughing.
Yeah, putting me again. I should take out something. Okay. So I'll just write down what Adeshayo have said, right? So I know for me, I can't speak for everybody, but for me, the habit I would like to take out would be maybe impulsive spending, right? When we get our paycheck, even before we even get it, we have spent it. I know that most of us will do it. We've already taken the debts before the money even comes in. So those kind of things are not good for us, right? Should be able to when we are making money, when our business is giving profit for us, we'll be able to sit down for a few minutes and plan for that money, right? So if it's you want to do the 30-20-20 rule or whatever you want to do, you need to plan for it. And I must say that investment is a personal thing. I can ask so many of us now that, okay, you're saving money. What do you want to use that money for? I mean, before you even start saving for something, before you even start keeping the money aside, you have to know what you want to use that money for, because that money should not always be with you. So you can say, okay, at the end of the year, I want to use this amount, I want to use it to do this. That should be your goal. You should set your goals and your priorities right, even before you start earning more, or even before you start spending your paycheck. So yeah, that would be my comment on that. So if there's one thing, because I know most of us now, we like to enjoy ourselves, just like Shaya have said now, you want to buy the latest latest week, or you want to travel to.
I think you're a bit muted, Manuel. Okay,
Can
yeah,
you hear me?
back on. Yes, please go ahead. Please go ahead. Please go ahead.
Yeah, I say those things are good. I mean, you want to go out, you want to go to like a pint of cans, and you want to go to cappuccino, you just want to take nice pictures and look good. Those things are right. They are good because obviously when you are out, you need to present yourself. You need to make yourself presentable. So when people see you, they say yes. But before you start doing that, you have to make your priorities right. You have to get your investments correct. You have to put your head in the game. You have to build networks. I like to say that your network, your people you keep around you do a lot of things in your mindset. You have to keep those right people around, people that want to invest, people that are willing to take the risk of investing while they are still young. So when they are older, they would not pay price. Yes, so that's what will be my take on that. Thank you very much.
Thank you for that candid advice. As you heard from Emmanuel, build the right networks and set your priorities right. So I'm sorry, as a researcher now, I'm coming to you, I love it. If you could show Gen Zs, a chart or statistics that completely change how they think about investing, what chart would that be and why is that? Love it.
Okay, I would name my chart Power of Compounding Interest, starting early. Okay, let me cite an example. Let me use 4 of us as an example. Shayo first, let's say Shayo, our parents started for her when she was 3 years. I started mine when I was in secondary school, started investing in secondary school. Emmanuel starts investing maybe when he got to the university. He started when he was in the university. And then Tilewa started when he clocked 40, maybe to celebrate his birthday. Oh, he got a lot of money. I'm like, oh, I think I need to start investing. So, let's imagine we all save 20,000 naira, let's say monthly. Yes, let's say monthly. And it's the same for all of us. So are you going to say that Lewa and Shaya are going to have the same money at the end of the day? Even with Emmanuel that started later, it can never come close. It don't start late. It should be saving for his children already. So I'll say power of compounding interest is really, and starting early is really a lot. And we always quick to say, I'm broke, I don't have money, I don't have up to you. Do you know how much you are earning? I'm not even earning as much as you do. I just have my business. Oh, I sell shoes. I only sell a pair of shoes a month. How do you expect me to invest? With just little amount, nobody's expecting a lot from you. And you're not in any competition with anybody. So I think investing should be for yourself, should be for your future. Because at the end of the day, nobody got your back. You're just on your own. And if anything comes up anytime, it is just you and God. So I just feel that investing starts now. Tomorrow might be too late. Tomorrow is even late already. Starts now. Now is the time. So I'll say that starting early and the power of compounding interest. Thank you.
Thank you so much for that descriptive chart and that candid advice about starting investment now. Speaking to starting investment now, please note that our mutual funds are available and they can actually suit your investment appetite. So I will be coming to you, Adetilewa. If you had a few minutes, just like 2 minutes or thereabout, to convince a Gen Z graduate to start investing today, what argument would you use?
Okay. Well, I can't use the compounding argument anymore because Lovett already used that. So I'll just have a very deep heart to ask them and tell them my mind. I'll tell them that investing isn't really about becoming rich. It's more about buying back your time. Every naira invested today is a future hour you don't have to trade for labor or for any kind of work in general. Starting with 10K might seem starting with 10K might seem a bit a bit small at the moment because you might think, how much is 10K? What can 10K do? But 10K consistently over a period of time, and that's a different ball changer. So the biggest advantage we have as young people isn't really this high salary, like I mentioned last time. It's time. So the quicker you leverage on your time and compounding, let compounding do its thing as usual, you'll be good. Thank you.
Thank you for that brilliant insight. Thank you. So thank you so much, our amazing panelists, for your time so far. And thank you for our audience that have actually been listening, actually been learning things from. I hope we'll be able to actually facilitate thing on too about investing, particularly as speaks to Gen Z. So going to it, please be reminded that our topic today is still Gen Z approach to investing, pivoting from instant gratification to micro investing. So now we'll take a couple of questions that we drop in the chat. This is say keep your questions coming, I will keep doing justice to them. So our first question is coming from Gloria Variave. Apologies if I mispronounce the name. I'll take on this is that the truth is the economy isn't encouraging it. Back then, things weren't this expensive. Opportunities were more accessible. Today, jobs are scarce, salaries are low, and even transportation costs are overwhelming. In Nigeria, the average Gen Z is focused on survival and trying to afford basic needs before even thinking of investing. She goes on to say that when a large portion of your salary goes to basics like food, transport, and rent, investing becomes a luxury, not a priority. So I will just want just be like 30 minutes or 1 minute, 30 seconds or 1 minute. I just want Emmanuel to just give his insight on that.
Okay, yeah. So thank you for that. And so investment should not be a priority. No, investment should not be a luxury. It should be a priority because I know that we know how things are in the economy, right? Things are not going well. Like compared to the last 10 years, things were a lot cheaper compared to now. But there are other ways we can do these things. We can, like I've said before, we can come together with 2 or 3 friends. You guys can put your money together. I had an engagement that happened, I think 3 months ago, where someone called me, who wanted to invest in your commercial paper. So I don't have the minimum amount to invest. What can I do to do this investment? And I gave her the advice. I would do this, do this, do this. And she was able to do that with few of our folks, and they actually invested in that CP. Right. So you can also even take advantage of your people that you know. I mean, everybody is a marketer. Everybody should be a marketer. I should be able to meet 1 or 2 people and say, okay, I don't have the money to do this. However, I know someone that has the money, and I know someone that has maybe the goods or services. You can stand in between them, bring those 2 guys together, and make something from being a middleman. I mean, if you sit down to think of ways to, it not necessarily has to come from your own pocket, right? We need to be creative, we need to be ideological, we need to be able to think about how to make money, even aside from your own personal income. So I would say that should suffice for that. Thank you.
Thank you so much for that. As you heard from him, investment isn't a luxury. So I'll go back to questions, and I think our panelists just have like 30 seconds, a minute to answer these questions. For Damilare Oniloye, so he has a 3-point questions, and I'll be sharing this with our panelists. The first question will go to Adetilewa Gbadebo. He said, for young people, balancing savings, goals, side hustles, and investment, how should we decide where money should go first?
That's a bit tricky. But for young people, balancing between savings, side hustle, and investing. So for me, what matters most at that point is your financial plan. Because if you are investing first and your side hustle is crumbling, you're focusing on the wrong thing at that period. And if you are saving where when these other 2 options are down, it's also not really a good thing. So how should we decide where money should go first? Everything depends on your circumstance, because everybody has different circumstances, and everything depends on your priorities actually. Thank you.
Thank you so much. As you heard, circumstances and priorities remain key to investment. Adeshaya, I want you to just take this question from one of our viewers. It said, what industries or trends should we young investors pay attention to over the next 5 years, 10 years, and why?
Okay, so what industries should young investors pay attention to? So my take on that would be, it is not just about paying attention to maybe industries that are popular now. The first basic thing should be paying attention to industries that structural change might affect. And this structural change, you are going to benefit from them long term. And I'm just in my priority order, or let me say my preference, I'm just going to list it randomly. So let's say, for example, in Nigeria, we know how food has been, food security and all. And let's take an example as maybe like an agricultural sector. So if we go to maybe like the NGS or so, we can see how they've been doing so far. We can look at their historicals and compute and say, okay, aside that, let's even bring it to the basic level. We all assume these industries are going to do well, because I don't think anybody will wake up tomorrow and not eat. In fact, we all want to have in abundance. So anything agricultural. So let's even look at maybe fintechs. So these are also, imagine, these are players. When you go and look at people, I mean, players that have contributed to maybe like the GDP, you see all these sectors there. We have our artificial intelligence and automation, all this IT, everything is there, and you can just pay attention to those sectors. All the less, we still have to do our research to be really, really sure that yes, this is the right thing. So it's not just something that you will just point and say, oh, this is it, this is that. You have to still do your own in-depth research. But those are like list of sectors that we are likely going to benefit from in the long term. Thank you.
Thank you so much. As you heard from Adeshayo, adequate research is key to know what is trending and what is going to be trending in the next 5 to 10 years. So this question, the final question from Marilo Yuloye, I'll give it to love it. So if a Gen Z investor could build only 3 financial habits in their 20s that will create long-term wealth, what would you prioritize?
Okay, I'll just divide that into 3. I'll say invest in yourself. Because we are saying that you should save your money doesn't mean that you should not take care of yourself. Look good, smell nice, eat good food. Eat good food. Because some people will want to save. They will not eat. Eat. And then the second one is invest. Have your long-term investments. Start saving, no matter what is happening, and your friend wants to borrow money from you, and someone somewhere swallowed something that telling you to bring money, you're not touching that money. It's your long-term investment. Save it for yourself, because of when days would come and nobody's coming to save you. Because I mean, no one knows what tomorrow is. And then the third one would be for you to have save money where you can always run back to at any time. Anything is happening, oh, okay, I can use this money to do this. And then keep on earning. Because some people would say that, oh, they already have their investment, they don't need to work anymore. Or the investment is bringing in yields for them. Well, it depends on the amount you are saving, right? You're investing. But I feel like get more money. Even the richest man still works. So I'll say get more money, keep on investing, compounding interest. So I'll say that these are like the 3 financial habits that gens should build in their 20s.
Thank you so much. As you've heard from Lovett, eat good food, whatever it is, ensure you actually have a very full tummy, and also invest in the long term, and also have an emergency savings for any emergencies. Thank you so much for that. So I will take the next question from Uchenna Woye, and the question is I think I will give it to Emmanuel. I think we'll start again. So he said, what advice would you give to a young investor who feels he wants to start investment journey with equities?
Okay, so with equities, equities market is very volatile, like we all know. So let's say, for instance, okay, a young person, say a teenager, wants to start investing in equities. It's important that, okay, as a parent, maybe you can give a certain amount of money for this teenager to learn how to invest in this equity. Because equity markets are very volatile. And if you say you just want to jump in the market and jump out, I'm sorry, you're going to lose money. I don't know how you want to do it, but you're going to lose money. So to be able to look at all the analysis, all the fundamental analysis you need to take, all those kind of analysis you need to do on whatever shares or stock you want to partake in. So you have to, like Lauren already said, you have to be able to, do your findings properly, your analysis properly, look at the financials, the ones that are available. So look at the trend of how those stocks have been performing. So before you can host dive, and it's not even good for you to just move with the crowd like we have mentioned. You have to sit back and plan. You have to sit back and look at, okay, how can I, which stock should I even invest in? How, even the amount I want to even look at. So how much should I even put in this to aim more yield? So the basic thing will be doing your proper findings and do your proper analysis, right? Make sure that you get your analysis right. Thank you.
Thank you. As you said, proper find and proper analysis remain key to your investment journey with equities. Shah, you have a final take?
Yes, I would like to add more to that. Okay, so I would say if a young person is trying to start out in equities, so the first question I'd like to ask the person is that why? Why are you seeing something that is giving you peace of mind and you want to jump into equities that is very, very volatile, like Emmanuel said? So the equities market is very, very volatile. It's not something that you just feel like people are doing and you want to do. Take me as a practical example. I literally did this thing. If I'm saying it's not something, I followed the trend and I did it. And I shed premium tears because I just kept seeing red, red, red. I didn't even know what I was doing. I was even thinking I was analyzing the company, maybe financial statement. No. So if you feel like you don't want to go for something safer, you are seeing maybe like the fixed incomes and you feel like, yes, my appetite can take more because you are still young. Of course, maybe the way they say you can still take more risk, you still have time to maybe like earn it back. Is it not better to just give it to maybe like a professional that can really undo this instead of feeling like it's just my personal take because I've suffered some and now I have a better understanding of how these things play out. So you might do your financial analysis, you might do your financial statement, you might check everything, but I think it is best if you know that you are not very, very grounded, especially as a beginner. I think it is you let somebody who is a professional in that space and do it for you.
Thank you for that brilliant take, and thank you for sharing that personal experience with us. Thank you so much. So to all everybody viewing us on this webinar, we thank you so much for amazing time that was spent with us, learning, facilitating, and encouraging each other about saving and pivoting from instant gratification to micro investing. So amazing panelists again. Thank you so much for your brilliant takes. Thank you for your insights. Thank you for sharing your experiences. You can still keep your questions coming. You can always reach out to us on all social media channels, and we thank you so much. Do you have, if does any of our panelists have any other final take? Okay, love it. Is there anything from you?
Okay, I'll just to what Shaya said, I'll just say, yes, let's just take the risk for you. Don't worry, just bring your money. We'll take the risk for you, and we are going to give you you're going to, just like our AMMF, bring in your money, we're going to invest it for you, and then you're going to get your yields, you're going to get your returns. Invest in our AMMF, our ABF, AEF, GIN, name it. We have to just come in. We have a working company at VI. You can always come in, and then we're going to just give you the maximum experience, the experience you're looking for.
Thank you so much. And we're also available across all social media channels and our website too. Adetila, do you have any final take? Your mic is muted. Okay.
Sorry, like I said earlier, let's capitalize on the time that we have and let's compound it, do it.
All right, thank you so much. Thank you so much, everyone. So we have come to the end of this session, and I hope you have actually learned a thing or two about investing, and particularly for Gen Zs. Again, thank you so much for actually sharing your time with us, and we'll see you later. Bye. Cheers.